Welcome to the FML podcast, the podcast on a mission to uncover actionable insights, explore the latest trends, and to catalyze your fintech's growth. Join Growth Gorilla's founder and managing director, Shamir Sajdev, and some of fintech's hardest-hitting marketers and leaders.
Welcome everyone to today's episode of the FML podcast. Today we're joined by Nick Root, CEO at Intergiro. Nick, thank you for coming along.
Thanks for having me.
For our listeners today, do you want to tell everybody a little bit about yourself, your journey so far, and perhaps a little bit about Intergiro?
Yeah, of course. Okay, so I'm English. I'm from London, born and raised, and I lived there for most of my life. The early part of my career was pretty traditional for a Londoner, I guess, banking. So I was at L&G and Lloyd's, which are two of the oldest financial institutions in the world. One of them is an institutional investor, one of the largest, I think, and the other is a retail bank. And really kind of used that to train me up and to cast a wide net. I did pretty much every role I could in those institutions, everything from operations to product to finance to tech. And then I went a bit more entrepreneurial. So when I was about 31 roughly, I quit the rat race and began working on smaller entrepreneurial products. So the CFO one or the CTO in another. And around 2017, me and my network were all pretty hyped about the internet and, crypto and IoT and platform and all these interesting models. And we were trying to create products, and most of them were money related because of my background. And we couldn't get most of them live, or we had a lot of challenge to get most of them live because of the banks. They didn't really want to work with us, and even if they had wanted to work with us, their technology was not in a place that we needed. So we hatched a crazy plan to create our own bank. And actually, 3 minutes later, we realized that bank was not the best approach. That was a huge amount of resource and money and time. So we didn't do that. We did an EMI in the end. Kicked that off around 2017. And the early insight there was that, we were looking at the macro automation trend, and we were pretty amazed that there was no bank accounts out there that you could control them with a code API. We thought it was pretty obvious that businesses would look to automate, and to do that, they needed to control their money with API. And so we created that product. So beta launched in 2018. We just did a really simple bank account with FX and a card. Nice, quick onboarding, but the key was that it was all controllable via API. And then we sold that across Europe, a few hundred businesses in the first year. But I'd always had my eye on embedded. I thought that's where the future was in finance, and I saw there was a big opportunity there. So then we took everything that we'd created, built for the bank account, for the B2B, and then we exposed that and made that available as a service. And then we launched our B2B2X solution around late 21, which we've been selling throughout 2022. We've been in stealth mode for most of our history, and we kind of had a coming out party in 22. So that's when we had our TechCrunch article, and I began doing these things and interviews and being on stage and things like that.
My big question is, I think, what was the feel behind the decision to sort of remain in stealth from the beginning of the journey, as opposed to sort of building a little bit more in public, or just being a little bit more?
It's a really good question. It's very unusual what we did. Most of the advice you'd have from a VC is go very narrow, try to nail some really narrow vertical and then widen. That's not what we did. We went wide. And that's because we were very clear that we wanted to create for people like us. We wanted to create a toolkit for innovators and people that were building things, new things, and we wanted to support them. And in order to do that, we really had to create a toolkit, right? Like a wide range of product where it was convenient for engineers because they wouldn't have to go to many different providers to stitch things together. With us, you can get the PSP or the acquiring processing. You can do the accounts and the FX and the SWIFT and the local payments, and you can do the issuing all via one API. So that's much, much more convenient for engineers and for builders, but also it enables completely new models because Basically, we have one strategic ledger where we hold that ledger across those 3 products. You can do things like closed loop payment systems. You can do instant settlement, which we thought was really crucial for the new kind of platform models that we were providing for. But to do that, we had to do a whole load of engineering, right? We had to create an acquiring processing system. We had to create a bank ledger that sat with many banks. We had to create treasury and FX around that. We had to create an issuing platform. So to answer your question, we were stealth mode and kind of engineering mode for longer than usual because we really had a very clear vision about what we wanted to create. And that was, a wide product offering where we create as much of it as we could in-house.
I think the other thing that's probably not so common as well, especially in the fintech space, is you're not VC backed, are you?
No, privately funded.
Yeah, privately funded, which is, again, very different. And was that a conscious decision or was that just a coincidence?
It was conscious because we were lucky enough to have private backers, so we didn't need much more money. I have had the question, why didn't you raise, a year ago or 2 years ago when everyone was throwing money at everyone? And I think that's a legitimate question. But one thing you got to remember is 2 or 3 years ago, we only had a bank account product, really, which was not super sexy. I did have a chat with a few VCs, and the embedded thing, which was in my mind and that we were working on, was still just plans. It wasn't live. It's now all live, but VCs and institutional investors like to see live things and proven things. So it didn't work out timing wise that we had an interesting product then, and we had enough private money anyway. So we didn't really want to give away share. Why dilute when you don't have to?
Absolutely, yeah. I think to a point as well, it kind of became a little bit of raising VC money became more for badge of honor than the actual need for the money itself, really.
It's interesting that,
it was like, TechCrunch, it was always, how much, such and such company had raised, and we were on the other side of things where we're a bootstrap business, and I think there's something to be said for profitable businesses versus companies who have raised loads of money. But that's a big conversation.
It's all the rage now, right? Everyone's looking for profitability, and I would argue that you don't really know how to allocate capital properly until you've been bootstrapped, right? But then I would say that because I'm on that side of the camp, that it is interesting how you get left off of a lot of press and reports and articles and blogs and stuff, because a lot of those, they just look at who's raised, right? That's the filter. And it's easy enough to just look Crunchbase, look at who's raised, and that's your list of sector, right? So it's kind of lazy journalism maybe, but I can see why. I can see why it happens.
Big numbers sell as well, don't they? They're going to be more eye-catching naturally, as opposed to we made 300 grand's worth of profit.
Exactly.
The landscape has changed quite significantly over the last 6 months, and with Intergiro coming out of stealth mode, has that kind of impacted your vision for the business or your short-term vision for the business, and how you're planning on sort of scaling and expanding now that you're out of stealth mode for the next couple of years? Has that had an impact at all?
Well, I wouldn't say on the vision. I mean, my vision is kind of decade long. So a blip here and now, or a year or two of slightly tighter funding won't change that. We will probably raise in 23, but that is unrelated to the market. I would say no, it's not changed much at all, because we've always run efficiently. We've always tried to be profitable at every level. So nothing's really changed for us. Like, the narrative has now changed for all the VCs, but for us, that's really just come in line with what we've been doing all the time. So, if you'd ask, if I'd been one of these businesses that had raised hundreds of millions and was now laying off a third of the workforce, maybe, I'd have a very different viewpoint on the macro.
So I just kind of want to talk into talk a little bit about that sort of decade-long vision that you have. I'd be keen to sort of just dig into using Intergiro as kind of the baseline. Where do you see Intergiro going over the next 10 years, especially with the sort of product that you've created? And what sort of impact do you think that will have on the wider sort of fintech space?
I think we're at a huge moment in fintech and finance generally. I think finance is being abstracted away from the traditional players, and it's making its way now into products and into offerings. So it's becoming much closer to the consumer, and that means that products will improve. Products will be more suited to those users and to the actual consumer. What's happening is, until now, software talked about money, it kept records about money, it did calculations on money, but it has not been able to touch money. And this severely limited the kind of products that could be built. Often as an engineer, when you're creating things, when it gets to checkout or when the money gets involved, it vanishes into some widget provided by some bank, and you lose the ability to control it or see it. And you can see how that would create a disjointed UX product experience. What's changed is that companies like us are remedying this problem. So engineers using our tools, they don't need to jump around to multi-providers to create what they want to, and they can now touch money all the way through their value chain, from checkout, payment, to the multi-currency wallet and FX tools, to Swift, all the way through to issuing and the Visa, MasterCard networks. So we're not the only provider here, but we are very, very well placed because we're the only provider on the market that is offering that full value chain. So, we are the principal member of Visa, MasterCard. So we're the acquirer, the account provider, and the issuer. There's no others on the market that are doing that. And we have this nice capital light model where we're not a bank. We're not having, you probably heard about the issues that Solaris and Rails are having right now with their regulators, and which is linked to the fact that they are banks, the huge amount of liquidity scrutiny that they're under. So we have a capital light model, a more comprehensive offering, and we've created everything from zero in-house. So we have very little vendor risk. We've not built this on top of other providers. We have a little bit, we do use a few other providers, but the majority of what we've created is all right, full stack.
To a degree, it's a fairly complex solution. Your first set of customers, how did you sort of go about sort of acquiring those? How was it received? Did they get the message and the proposition straight away, or does it require some sort of education for them? Has that been any sort of, created any sort of friction in terms of acquisition?
It's a complex from our end of things. We try to make it simple for the user. So under the hood, we're doing all kinds of trickery and treasury management and things like that. We tried to build this system so that money can move around like data moves around in the cloud, right? In between all these offerings. So it's tremendously complex under the hood. What the client sees is some pretty simple endpoints. Issue card, create account, onboard consumer, change limits. Our role is to try to simplify this incredibly complex world of payment networks and payment rails and scheme rules and compliance and legal rules, and try to simplify that into something that engineers can use, and they don't have to worry too much about that. So I would say it's not as complex as you think for the user. However, it is a new thing. There's not many providers like us out there. I was predicting there'd be a need for this since 2017, but I didn't see much actual pickup of interest, like I said, until 21. And in those early days, early kind of users, we did have to do a lot of explaining and using examples. Embedded finance wasn't even a thing until the partner from Andreessen Horowitz. Well, I think it was around 2020 that it became a word, it became a thing. Before then, it was just me trying to explain it in these really awkward ways. But now, late 2022 and early 2023, there's much, much more knowledge around us. I mean, when we're at conferences now or last year, everyone's approaching us, knowing what we do and knowing what we have and knowing what they need. And that was not true in previous years. We had to do a hell of a lot more, walking them through the benefits of this and how it could improve their offering. So that's changed a lot in the last 12 months, I'd say.
Yeah, there's definitely a lot more education out there now as well. I think, even the term Fintech has become more mainstream and, people are more aware of it. I think a good example of, adoption is open banking in the UK, for example. There was a point where there was a serious lack of trust in that functionality. But now, I mean, even the HMRC have adopted it. You've got, Klarna has adopted it for making payments. It's available on nearly every other fintech app now. And I think embedded finance is a little bit like that, where it's that adoption's really starting to pick up now.
Yeah.
So I think that kind of leads us into sort of like 2023, and what I'm kind of keen to find out is, what does 2023 look like for you in terms of priorities? Is it now bringing Intergiro to the masses, scaling hard, or are there sort of other things that kind of need to be nailed down before you kind of sort of push the go button?
So I think 23 for us will involve an institutional fundraise, and that's for sure, because most of the operation we have right now is, it's super lean. I think we've pulled off a bit of a magic trick on efficiency, but that's not going to work as we ramp this up, right? And the wait list for our product is growing, and we can't process it quick enough. So that's a nice problem to have, but we need more resource to handle that volume. But once we do that, we're going to go all out on this. We're going to be running out to platforms and processes and exchanges, and really pitching the value of this. Pitching the value of creating your own payment networks and your own payment loops, and just how your product can change when you've got instant settlement running through it.
There's two things that you said there, which was, I think probably nearly every founder would be their dream, which is, having a lean team and having great amounts of efficiency. And then at the same time as well, having a wait list where there's so much demand that you can't process it quick enough. I want to talk about both those things. So that efficiency piece, and you've been lean. As you said, you've obviously got private funding. You've got quite a few staff members. I'd really like to understand, as the CEO, how have you sort of created a culture of efficiency, and what do you think the ingredients to that has been, and how do you think you've made that successful?
I mean, one thing is that it comes from the top. We're not flying around in private jets and things like that. We're rolling up our sleeves and doing the work like anybody else. At this and almost all other team and cultural and management problems are related to clarity of communication. My approach to management is just complete transparency for ethical reasons, because I want people to make their own decisions, but also just out of self-preservation. I don't have the energy to keeping up loads of different versions of every, a reality, right? We've been very clear about what we've got money to spend on and what we don't have money to spend on. We were very clear about our spending is completely linked to the P&L and cash flow. And we communicate and we publish every month. It's there on data that's publicly available for everyone to see. So I don't think there's a trick or anything like that. I think you've got to be open and clear about it. And I think you've got to trust people to make their own decisions, right? I think that's the key. Transparency. And there's also a little bit about who you recruit as well. You can, after a few years of recruiting, you get better finding the people that are thinking long term with you. They're not there for the salary per se. They're there for the share and the equity, and they're there to create incremental value with you. We would always probably have red flags if someone's requesting top of market salary. Even if they're awesome, we probably wouldn't hire them. So I think it's a combination of communication and messaging from the top, and then of how you recruit.
And then I'll say with all of that, something that we spoke about very sort of briefly before we started recording was obviously you're hybrid, but you're in Portugal. You've got teams based out in Sweden. How are you finding that communication piece with people working remotely? Do you think that's held you back in any way, or do you think it's actually been one of your strengths as a business?
I would call what we are hybrid, because we have hubs, 3 hubs in Sweden, we've got a few more across Europe. So it's not complete remote, but most of our communication, like most businesses now, is in Slack and on video calls. But we've been like that from the beginning, since 2017, since before it was trendy with the pandemic. So we've been working on this for a long time. That's one thing I'll say. And strategically, we went down this road because, we didn't have any money. So, we couldn't compete in London or Stockholm or Paris for top lawyers and top bankers. And we had to come up with a strategy to attract people that had enough of that kind of rat race and were looking for a little bit more flexibility. And we call those kind of city quitters. So we did really well at that. And it was absolutely amazing people that just had enough of the top law firm, had enough of the investment bank or whatever, the consultancy firm. And then we just carried that on. And so when COVID hit and everyone was doing that, we were already, 3 or 4 years into that process. So it really had zero impact on us operationally. But it's not easy. Even though we've been working on this since 2017, we're still working things out, right? It's not like we have all the answers. What I would say is you've got to run the business completely differently. What I saw after the pandemic was that most of the businesses that were doing this were basically taking the hold approach, the analog approach, and then just trying to run that online. And I don't think that will work at all. That's not how to do it. You've got to run the business. You've got to recruit. You've got to run meetings. You've got to communicate in completely different ways. You've got to use different tools. So yeah, we've had our challenges. We've worked through things, over and over again. We're always iterating. We're actually just working our way through a Slack defrag right now, where we're just having another look at what channels we need, having another look at who should be in those channels, and having another look at like thread rules and things like that. So I think there's no one answer. It's an evolving piece. But I would say, it has been a strategic strength for us because it's meant that we can get top, we're in the knowledge economy. We need top lawyers, top compliance people, top engineers, and we've been able to recruit those people without breaking the bank. So yeah, I would say it's been a strength for us. And it's not only more efficient, but the business is more resilient because we're like a network, right? We're not in one place.
Yeah, we're fully remote and I think that's been our strength as well, to be able to capture, like you said, top talent, finding the right people. We can cast our net. We've got team members predominantly in the UK, but we've got people out in Greece, people out in Spain. And that's been really, really helpful because it's a great benefit to offer. And then at the same time as well, it means that, we have our pick of the talent. The big thing for us was, if I'm honest, like when we brought in our ops manager, I suddenly realised that how much more efficient we could be. And I think over the last 6 months, our efficiency has improved massively. So I'm really happy with that. I kind of said there was kind of 2 bits I wanted to talk about. One was obviously the being the inefficiency, and the second bit was obviously the wait list. I think nearly every sort of fintech founder, marketer, operator wants to be in a position where they've got so much business or so much demand that they can't process it quick enough. So I suppose my main question is, how did you make that magic happen? Was it sort of purely down to marketing activity, or was it referral, or, what do you think has been the catalyst behind that?
Well, one thing to say is that we've been a bit lucky, right? We timed this market pretty well. So we were around when everyone was learning what embedded finance was, back-end service was. So we have rode a bit of luck. We've been working really hard on SEO. So we don't do a lot of paid advertising. 80% of our embedded leads are organic, which is a huge credit to Yele and his team, who you met earlier. That's it. It's SEO and a lucky timing, basically. And here's a nice problem to have. It's the problem that everyone wants, but it's still a genuine problem. It is still quite an operational challenge because when you're in the regulated area, unlike SaaS, where basically the pipeline equals onboards, in a regulated space, it's not quite like that. You have to onboard them. You have to do the KYC. You've got to do all the checks. You've got to implement them technically. So you can have a wait line as long as you like, but the onboarding challenge for a fintech is a serious thing. And when you're as lean as us and you haven't got thousands of onboarders, working on it, it's all about process and efficiency and, other hard yards, automation. So yeah, it's of course the problem that we always wanted, but it's still quite a challenge at the moment.
Yeah, like you said, it's still a problem.
Yeah.
That impacts customer experience and all of that sort of stuff. And you want to have positivity out the front, out the gates. Really.
Well, you don't really want a wait list too long because they start talking about how long the wait list is in the forums and the reviews.
Yeah, there was a period sort of end of 21, beginning of 22 where building wait lists were kind of all the rage. And we had a lot of sort of like the early stage guys coming to us to help them build wait lists. And it was like, we never quite got the efficiency of it, because you build the wait list and then you have to then pay to then convert those individuals. So you're almost like paying twice for the same person.
Yeah, it's the hype, right? Like the hype train. But I would say most of those were consumer brands, and most of those were SaaS products where, you know, when you choose to onboard, you can do it relatively quickly. Like even if you're regulated, you know, the consumer onboarding is significantly less of a challenge than business onboarding, which is what we do. So I would say having a long wait list of businesses is more a problem than having a wait list of consumers, where you can basically automate most of the onboarding now.
In terms of kind of, you know, what's left to say, really, I think, you know, asking the question of, you kind of said, you know, what are the plans for 2023 and kind of giving us your long-term view. What does the next sort of 5 years look like for Intergiro and for yourself?
So I'm going to be around for at least 5 years, I hope. Like I said, this is a decade-long mission. I think we're on now. And the next 5 years are just going to be about growth, growing at a sustainable, realistic rate, where we create relationships and hopefully enable the creation of new opportunities, you know, so like new businesses, new business models that can be created with a product like ours on the internet. That's what I'm really hyped about. You know, in our short life, we've already enabled, I would say, 3 models which could not exist without this product or without this offering. And that makes me super proud.
Nick, let's just jump into our quick fire round.
Quick fire? Okay. Sounds a bit scary.
Yeah, it's my favourite bit. What podcast are you listening to at the moment? What's on repeat?
Andrew Huberman, the guy that talks about neuroscience. He tries to make neuroscience like available and easy to understand. So I check him out. It's really cool.
What books are you reading at the moment, or are there any that you would strongly recommend to other founders and marketers potentially, and other leaders in space?
I'm one of these annoying ones that just kind of reads a few books at a time, and I kind of just crawl through them at a time. So I'm reading one called "This Is the Way the World Will," or "This Is How the World Will End." It's about cyber warfare. It's basically a true narrative about how the superpowers are using cyber weapons. It's really cool, really interesting, and kind of worrying as well. And another one I'm reading, "The Way of Zen" by Alan Watts. I'm quite into Zen a lot of it. So those are the only 2 I can remember right now.
That's cool. That's plenty. Other than Intergiro, what's your favourite fintech app or platform?
Stripe. I don't use it, so it's not like but I just love the way it's run. I love the mindset of the people. I love the Collison brothers. I read as much as I can about them. I love the ambition. So yeah, I think it's those guys.
Surprisingly, I think you're the first person that said Stripe. Everybody says Monzo or Revolut.
Really?
Yeah, it's the first time I've heard Stripe. What's the best bit of life advice you've ever received?
The best bit of life advice was no one else knows what they're doing either.
Yeah, I like that. And very, very true. That's good. And then I suppose my last question, probably my favourite question, is what's one thing that I haven't asked that perhaps I should have?
Why live in Lisbon?
I was going to say, tell us why.
Because it's nice weather and nice people. If you like the beach, it's got the best beaches in Europe. The airport, if you're a Londoner, the airport is right in the middle of Lisbon. So you don't have to do any crazy trips across London or across the city. It's always local. If you travel a lot like me, that makes a difference. That was brilliant. Really enjoyed our chat today. Thank you very much for joining us. Thank you for having me. That was a lot of fun.
The FML podcast is brought to you by Growth Gorilla. To find out how our marketing growth experts can boost your fintech's growth, head to growthgorilla.co.uk. And make sure to search for the FML podcast in Apple Podcasts, Spotify, or anywhere else podcasts are found. Don't forget to click follow to ensure you don't miss any future episodes. On behalf of the team here at Growth Gorilla, thanks for listening.